All righty. Well, hey, everybody. Welcome to Steve Cooper's podcast for aspiring real estate investors. In each episode, we try to bring industry subject matter experts to share their experiences with you and be able to tell you something that you might need to know. Today, well, before I get started too far down the road, please make sure you hit the like button. I'd love it if you subscribe to this channel. And if you feel like this is something your friends might enjoy, please share it with them as well. Now, back to where I was. So today, my guest is really somebody very special. Let me read this out to you. So she built and sold an 18-time award-winning agency called Tigris Events. She is a podcast host like myself, so I'm actually interested in learning some tips and tricks from her as well. She is a published author. And she is also obviously a real estate investor, which makes the subject easier for us to all talk to. Most importantly, now she's the chief content officer of Executive Lens, where she helps busy business owners curate compelling content to build powerful personal brands. Ladies and gentlemen, I'm so excited to welcome my friend Serena Holmes. Hi,
Yeah.
Serena.
Hello.
Did I get that right, or was there any mistakes in that?
Yeah, no, I think you nailed it.
Oh, good. Oh, good. Well, Serena, so in this podcast, I really just am wanting to highlight your story and I'd love to hear more. So why don't you tell us a little bit about yourself?
Sure. Yeah. So you did mention Tigris. So that was, the better part of my life and career for at least the first 18-ish years. I fell into events when I was in university. I was studying for journalism and kind of got the introduction into the events world early into my years of university. And what I didn't know at that time is that that would kind of become my backup plan because becoming a journalist, namely a broadcaster, is not the easiest thing necessarily when you're starting out. Oftentimes, people have to move to really remote, small locations and kind of work their way up through the markets and stuff like that. And the opportunity with Tigris happened pretty much right as I was finishing university. I started with them as a brand ambassador in like April or May of 2004. And then the woman that started that business brought me on board as an account manager. And then very early on started talking about partnership because it was really brand new. She wanted to be the face of the business, bringing in sales, like recruiting talent. And then I was handling things behind the scenes in terms of operations. So basically planning the events, staffing them, issuing payroll and things like that. And 4 years in, she ended up leaving for personal reasons. And we had already grown the business to a decent size. Like we were working really steadily with Motorola and Rogers, a lot of event planners and consumer packaged goods. So I took the risk to go through a buyout in 2008, which was technically the middle of the recession, but
Yeah.
we were actually quite busy during that time. So it took about 2 years in total, and I took over complete operations of the business and kept it at home for a long time, just trying to save money and save up money to buy an office. So we ended up scaling up to that in 2015, and then I continued to grow, moved into a larger office in 2017. And at the height, we grew up to about 10 of us full time and about 2,200 part time across Canada and the United States. So we were very, very, very busy. And then I was introduced to the world of real estate investing through a coach of mine. And she just said, you've got all this money in your business bank account, like it's far more than the average business owner would live off of. Like normally they keep 3 months of operating costs, and I had about 18 months. So, no matter what, I was like, I can cover any expense that comes in. And so she encouraged me to invest. So I ended up buying a short-term rental property in Florida, which I kept for 4 years. And I bought it when the dollar was par.
Yeah.
When I sold it, I was back to square one. I was like, what do I do now? And then I started staffing events actually for a well-known real estate education company in Texas and Florida, and went to one of their events, and it led into the summit and all kinds of other investment opportunities. So active and passive, bought a couple properties, pre-construction, invested in land development, syndicated mortgages, and then that led into the world of private lending.
Nice, nice. What a tremendous story. And you decided to take on this business right in the height of the recession. That must have been something that wow, well, you've got tremendous courage. I think that there's so much about you and so much of a background that you've got to share, and you're so young. So it's incredible how much you've packed into such a short period of time. Let's talk a little bit about the private lending then, if you don't mind. Like let's go into what you learned about that. And um, obviously there's a few ups and downs recently in the industry there, and I don't need to go into too much detail, but
Yeah.
think one of the things I'd love to know more about would be what you've learned in that regard that would change the way you invest now. Is that something that you could heighten a little or put a highlight on a little bit?
Yeah, I mean, I think with everything that's happened now in the last 12 to 18 months, like I would want to be the lesson for people that are considering something like this because I think I was really naive and I thought that, I'm diversified across at the height like 18 different deals, split across I think like 14 different operators. And I was like, well, I know that there is an element of risk and what are the chances they're all going to blow up? And they all blew up. Like in a way that I just can't even wrap my mind around. And I think my general takeaway now, like I would never touch anything that's unsecured now, fully understanding what that means in the eyes of the law. It's almost like you don't exist. And the order of priority and your legal options are far significantly different. But when I first started doing this in 2018, I did have a lawyer look over a lot of my deals early on. And it's kind of frustrating because I feel like if I had gotten different advice at that point in time, I would have made very different decisions as time progressed. Even if I did like a little bit of unsecured private lending, like knowing what I know now, like would be very different. So in the beginning, the agreements were written in such a way that if you had the event of a default, that you could put a lien on a property. And what I learned in this past year is like it never ever should have been written that way. So the lawyer really should have flagged that to the point that I'm even considering does it make sense to file like an errors and omissions claim? Like knowing what I know now, because he really didn't highlight the risks. He really didn't educate me on these legal priorities. And I think maybe because he was a junior lawyer at that point in time, like part of a more established firm, but a little bit more junior, they're also more like corporate real estate lawyers rather than litigators. So I think if a litigation lawyer had looked things over early on, I would have gotten very different feedback and input. And then as I learned, like, in the beginning, I worked exclusively with a mortgage broker. So I was one-to-one with a lot of these people. They weren't necessarily investors. So they might need to wipe their line of credit clean for a couple months before closing on a mortgage or for their business or something like that. It wasn't these large scale real estate investors. And I really think that bigger is not necessarily better. Like if you're one of 100 or one of a couple hundred, that really means nothing. And everyone kind of thought there was equity backing a lot of these properties. But we learned later is like, because again, unsecured is not registered, we were told that we might be one loan of 50,000 on a property worth 2 to 300,000. And after some of these bankruptcies have occurred, we're discovering that, well, we're actually one of 20 people that each loan 50,000. So the amount of debt on a property worth only a few hundred thousand is like $1 million. Like
Hmm.
it far, far, far exceeds that. So, there was a lot of fraud, misrepresentation. Things were definitely not what they should have been. We learned later a lot of them were involved in development and stuff like that as well, where we just thought these were small single family homes doing like lipstick renovations and stuff like that. And, what we learned is like things were significantly
Different.
represented to us in one instance with a brokerage. So, yeah, it's been a lot of lessons.
A lot of lessons. So you were actually dealing with a broker who was dealing with an investor who was trying to actually raise money or raise capital. So you were like third. You weren't necessarily connected directly with the people that were doing the investing.
Yeah, that came later. Like in the beginning, I was working with a mortgage broker that, again, it was all these smaller, like independent deals.
Hmm.
And it went really well. Like for 4 years, I think I did 25 deals and everything was fine, like paid back on time early, never an issue or a hiccup.
There you
And
go.
early 2022, I started to expand and through my network started to get referrals to other companies that were doing different work and some was land development oriented, which I know now like they should have been just raising money with equity, not with debt, because it wasn't sustainable. And that's how a lot of these operators, I think, ended up going down.
Yeah.
Um, and then I was interviewing actually at another brokerage, and there was someone on stage, another licensed realtor who was one of the partners at this brokerage who also owned a couple of other offices and like a very well-known brokerage, like it was a Keller Williams brokerage. And he was on stage talking about this very significant portfolio that was worth $87 million. He had 1,000 doors. A lot of realtors actually don't invest in real estate. So it really struck a chord with me. Like, I don't know why a lot of realtors don't invest in real estate. It's really unusual, actually. So we talked afterwards and I said, how are you financing these single family homes? Like, it's very difficult to obtain financing for things like this. And he said, I'm working with a really real estate investor friendly mortgage brokerage. And he ended up making an introduction. And at that point in time, I had some money in cash from the sale of my business, from the sale of a couple of properties. And I just thought, well, again, I'm back to square one. I'm trying to decide what I want to do next. So I'll park this money for a year and I split it across I think like 8 or 9 different operators, thinking like I'll park it there for a year and then decide what I want to do, educate myself a bit more. And when the money was due back, they asked for a year extension. I said, well, I really needed this money back. I was planning to invest it. But I was like, okay, well, my year end is December. I'll allow a 6 month extension. And they essentially went into CCAA like 2 days before the money was due back. And then everything exploded. And then we realized like how significant all these issues were with this brokerage because this wasn't just a couple borrowers in this situation. This is about 40 different borrowers that were all carrying on business
Hmm.
in this way. And I mean, it's about $250 million in losses split across like 600 plus investors. And even the first position mortgage lenders are lucky to see 40 cents on the dollar in some cases because the values were so significantly overstated, fraudulent appraisals based on after repair value, and then the repairs weren't being done. So, I mean, this was like the most significant of all the issues that have happened in the last year. Not the only one, unfortunately. And then it just, one by one, like all these other big operators have gone down. Like even in the last couple of weeks, there's been 2 more that have filed bankruptcy. So it's just been on a level that I can't even wrap my head around still.
No
So,
doubt. There's so much optimism that people come into investing with. They believe everything they hear, maybe naively, right? Because there's a lot of good salesmen out there,
yeah.
but there's such such a level of risk that sits around the corner always that you need to be
And you always
cautious.
hear that though. Real estate is risky, but I think people always believe like it's a tangible asset. There is that, and for the way that things were stated based on the loan to value ratios and stuff, we all had confidence in what was being presented to us.
Yeah,
And then we realized later, again, the way the contracts were written should never have been written that way. There's no way to say that this wasn't fraudulent in this instance. And it's actually shocking here in Canada that there's just very little appetite or resources to pursue white collar crime. So it's very unlikely that the people involved in this matter will even see any consequences. And if it was the United States, they'd probably be going to jail for a few decades. So it's just, again, it's really shocking and it's really heartbreaking because there's people that have either sold their houses, lost their houses. There's 3 people that have killed themselves in this situation. And it's just really heartbreaking to see like the people involved in creating this mess are just carrying on like they have no idea like what they've created in their path.
no accountability whatsoever. Oh,
None.
that's
No.
horrible. That's horrible. As I was as I was alluding to there, there's this level of optimism, and so when we're learning about investing, we're learning a lot about studying markets and trying to make sure you got a strategy that you've got 'em ready to roll, and
Yeah.
a lot of a lot of analysis that happens, but none of that analysis is detailed enough into who you're loaning money to if you're a private lender. I feel like that's a course in itself, like there's really so much that you due diligence you need to do on the people, not
Yeah.
just the property, right?
Yeah, yeah, and you wouldn't necessarily know that until they kind of reveal themselves later. I know one person that's really big on private lending. He's pretty much loves debt lending, but he also diversifies across a lot of different sectors, like agriculture. Like I think he's got a dental office. Like he's got a whole bunch of stuff. But what he does to hedge his risk, he only ever comes in first position, and usually he syndicates his position as well. So it minimizes the risk even further. So if say a couple 100,000 are needed or 800,000, he may go in with 4 or 5 investors on that one deal so that he's only ever in for maybe 25, 50,000. But then he's got so many of these kind of happening, like he really strengthens his position in different ways. And, he'll take action pretty quickly in the event of a default. And as a secured first position, you have the right to do that, right? So he's really smart in how he does it. And then there's someone else I interviewed for my podcast recently that had such an interesting strategy with alternatives where he invests in late stage litigation. And I was like, I didn't even know you could invest in that. But
Yeah.
it's something where, lawyers need money to, cover their costs when they're going through these really large scale settlements and stuff like that. And usually they're so far down the path, like they're very clear on their outcome. They just need money to continue along, and it is secured in a different way. And it was just such a unique alternative strategy. And he just said, diversifying, you can't look at diversifying from the standpoint of like, okay, well, I'm going to invest in 20 different real estate deals. It's still real estate. So if the real estate market hits a rough patch, he's like, no, maybe you do 2 or 3 real estate deals, 2 or 3 in litigation, a couple in this, and like really like completely unrelated industries. And it really insulates you that much further.
That's a 360, isn't
Yeah, yeah, it's so interesting.
it? Let's talk about something positive. Let's talk about executive lens.
Yeah.
Tell me more.
Yeah, so I mean that all came from, all this chaos, right? Like I was kind of living the good life for a long time and what the private lending allowed me to do was take a step back when my daughter was young and I was able to triple my income from what I used to take with my business, but I ended up selling it in February of 2022. So it's not like I can necessarily go back. But when all this stuff was hitting the fan, I was like, what can I do to bring in more income? Like, yes, I'm a licensed realtor, but the market's really, really slow. A lot of things are sitting for a long time. It's not dependable at the moment. And I thought, what can I do that gives me control over my time? It can really help other people. It can lead to a lot of repeat business because people need to continue to create content. So essentially, what Executive Lens would be involving is media coaching for business owners and basically curating the content in a way that we would have a 60 to 90-minute recording session where I would interview them on various aspects of their business, coach them through a really strong hook, and then they can tell their story and the lesson. And then I would give them back all of the pieces of content to basically plug and play on a month-to-month basis. So anywhere from 12 to 20 pieces of content. Video is really the main component. There are a lot of people that slice up podcast episodes and things like that, but the reality is a lot of business owners don't know what they want to talk about. They don't know how to come up with that hook. It's one thing in a podcast where it's two-way, but the finished product wouldn't involve me. So they have to add context to the question. So the coaching aspect is very, very significant. But essentially, I'd like to be able to work with people that are trying to build their personal brands, more specifically on LinkedIn than other platforms. But it's a way that it can open up other opportunities for them if they do want to go down the path of writing a book or have keynote presentations and get featured on podcasts and things like that.
I love the content that you put out. It's message is perfect. No, really, it actually talks to me. Every single post I look at, I say, okay, well, that actually resonates right here.
Yeah.
So I think that you're brilliant at that. So this client base, how busy is this going to make you? Are you going to be doing this full time? Is it coupled
That
with
would be the hope.
investing in other things?
Yeah, I mean, I think again, a big part of it, having a young daughter, is that I want the control over my time. Like
Yeah.
when you are a realtor, like, you could get calls at any time of the day or night, or you've got to meet with people at their convenience, where something like this would allow me to record at a fixed schedule. So ideally, if it's something like if I recorded with a couple clients, maybe Tuesdays, Wednesdays, and Thursdays, and then I can do the editing and things like that, or outsource the editing on other dates. I think at the minimum, I'd want to take on 10 clients, but I think if I was looking to really grow, I could take on upwards of 20 to 25. And then if it got to the point that it was so busy, then I would look at hiring content producers as well. But I think outsourcing the editing piece would allow me to be client facing for more people.
You got the connections to make it all work. That's the key, right? I think you've been doing this, you know what works, you know what doesn't, and I love the way that you structure it. So, if I was working with you as one of your clients, um, we would spend how long together before you'd be able to take that away and give me something back? Is this something that's several months of a program, or is it, how do you do?
Yeah, it's just a month to month. So, I mean, the commitment's really about 60 to 90 minutes. And ideally, what we'll go through is, how long the recording session dictates how many pieces of content you get.
Mm.
So it's anywhere from 8 to 12 videos. And then the other content would be more graphic and ghostwriting. But essentially, again, we're going through those leadership lessons, right? So talking about really impactful stories and things that would resonate with people, but structuring it in such a way that you do grab their attention and pull them in for that 60 to 90 seconds when they are watching the video. So from a business owner standpoint, it's not huge, like an hour essentially a month. And then if you have a marketing team that can push everything out for you, otherwise I do have an option where I can facilitate that as well. But ideally it would kind of just go to you at that point, and it is more content creation than it is like social media management.
And this is called executive lens, so it's not exclusive to real estate. It's something that's business, right?
Yeah, ideally business owners that are at a certain level, like ideally they're established, they have minimum $2 to $10 million in gross revenues. Like they're at the point where, they're growing their business and they're at the point where they really want to create that legacy for themselves and,
Right.
start focusing more on their personal brand because the business is already rolling at that point. It's probably not the best for somebody that's brand new or a startup.
Right, right. But you're able to actually help lift that business up and create that, like you say, the legacy. That's brilliant.
Yeah. Yeah.
Okay, well, let's talk about one more item I see in the background, the accidental entrepreneur. Tell me about your.
Yeah.
Tell me about your book.
So, when I was growing up, my childhood was pretty crazy, and people would often say, like, you're gonna have to write a book about this one day. So I feel like the seed was planted really, really young.
Yeah.
And essentially, what happened is my parents separated when I was 4 years old, and my brother went to go live with my dad about a year later, and he actually died in an accident on their property because he was left unsupervised.
Mm.
And it's just so frustrating because it never should have happened. And I don't think I've
Very
ever
funny.
gotten complete clarity on that. But my mom was just devastated. Um, I ended up having to leave living with her to go live with my dad because she just wasn't emotionally stable for quite a long time. And it was a very defining part of my life. And wasn't happy living with my dad and my stepmom for various reasons. She was really like emotionally, sometimes physically abusive. Tried to leave a couple of years later, got sent back. And then we kind of knew like the court system wouldn't allow me to live with my mom. And an aunt and uncle ended up taking me in when I was 12. So I lived with them the last year of elementary school and throughout most of high school. And then it kind of just talks about how all those challenges really paved the path into entrepreneurship because I was always really scrappy. Like, I worked three part-time jobs all at the same time, always said yes to opportunities and things like that. A lot of the time, like things that my friends would never dream of necessarily doing and really kind of pushing the boundaries of your comfort zone, just going into different environments and stuff like that. And that's how kind of Tigris came about and just sees the opportunity. And then it kind of goes through the business aspect and all those lessons that come about when you're a business owner. It just, connects the two. And the woman that I went through a writing retreat in San Diego back in 2018, she's like, you can't really have this memoir and a business book. And I was like, well, it doesn't have the impact if you don't tell both sides of the story. It's kind of like how Tony Robbins talks about his story and how his mother was really abusive. Like, it wouldn't be the story it is if he doesn't tell that side of it. So I really felt like I had to kind of set the foundation for what kind of pushed me in that direction.
I love it. I love it. You've got you've got that fire underneath you, and now that helps me understand a bit more of it. I mean, you've
Yeah.
accomplished so much in such a short period of time. Entrepreneurs, the world needs more of them, right? We need to have people that are capable of thinking on their feet and seizing opportunity and helping the economy grow through that. And I
Yeah.
feel like our school systems don't necessarily help us. It's like the accidental entrepreneur. You don't deliberately become one typically. It's something
Yeah.
that falls in your lap.
Yeah, I mean, I thought I'd be hosting the news. So, it wasn't the plan. And I think all the skills and experiences I have still lend itself really well to where I ended up. And
Mm,
I think it was probably a lot better in terms of control over your time and things like that. But yeah, the opportunity kind of fell in my lap and I ran with it. So,
yeah. So now you've joined one of my favorite people and being part of the Savvy Squad. You've come and joined Michael Ponte and all of us squatters, and we're really happy to have you there. Tell us about the decision and what you're finding so far.
yeah, so I kind of got looped into another group last summer, and they were basically running a platform on school, and they were having different people coming in to coach entrepreneurs and business owners and things like that. So they had one focus on business development, one was on branding, one was on crypto, like all these different kind of streams and things that are relevant to people when they are running a business. So I was working with them from September till about February, March, and then they decided instead of kind of going wide, they decided to really niche down and just have a really small mastermind with maybe 20 people maximum. And they started offboarding their coaches in different areas. And the girl that actually helped me launch my podcast, she was the one that gave me the idea. I was doing a podcast she facilitated, and she's like, you should really have your own podcast. But she works with Michael, and she kept on saying, I told Michael he should have snatched you up. And I was like, you've said this a couple times. Like, what do you mean exactly? And then it looked like he was trying to kind of build out his program with
Yeah,
Savvy Investor with, similar models. So there's some that will focus on land development, private lending. For me, it'll be more of a business focus. So the business fundamentals that people need when they're starting out, because what I've seen really in this last 12 to 18 months is how many people were not running their real estate business like an actual business and they lacked, a lot of the things that I think you need to succeed. So I'm adding, my components. So building on it with business fundamentals, things to do with productivity, finance. We'll go through different marketing aspects and ideally bringing on an expert as a co-host for each of those different segments so that they can add in their 2 cents on what you need to be successful.
Love it. Love it. I've seen what two sessions with you now as part of the team, and I love everything you bring into it. It's wonderful. Podcasting. How's that going?
So we're announcing our 100th episode this,
Woo!
and so I think that's a big testament because when I started out, like some people are really supportive and other people are like, talk to me when you've hit 100 episodes, like,
Yeah,
and I get it because if they're being asked all the time, like you don't want to go on one that like doesn't even air or doesn't even get there. And I launched in a very different spirit than where I'm at now. Like again, it was inspired to invest. I talked a lot about how I was a big proponent of private lending, the time freedom that it gave me, and I was really, really passionate, excited about it. And then all this stuff happened. Um, and obviously it's jaded me a little bit. I do still believe that there's so much tremendous opportunity and power in it. But Elizabeth Kelly said something recently that was impactful, where she said, you could be in the right vehicle, but in the wrong lane.
yeah.
So I was like, yeah, I was thought I was kind of going down the right path, but I was just somewhere along the way ended up in the wrong lane, right? So I do still believe in it. But at the beginning of this year, I diversified the podcast to encompass business owners and entrepreneurs as well, not just real estate investors, because I just want to make sure it encompasses all of those things. And for this 100th episode, I have the owner of a company called Frame Tech. And he had such a powerful story because he built up a significant business. He had about $20 million and he lost it all. And then he took a couple of years and had to regroup, started again. He's had 70 businesses, and Frame Tech is one of the biggest right now, and it's valued at over $100 million. So he had this very powerful comeback story and just had really amazing nuggets of wisdom that I think just kind of was the best example of like even my journey reflective through somebody else that's on a much, much larger scale. And yeah, I'm still continuing along with it. It's opened up different sponsors and brand collaborations and things like that, and connected with people I never expected, like all across the United States, all across Canada. So it's been a really great journey in that respect.
I love it. Well, you are my 45th guest, so I'm almost halfway to where you
Yeah.
are. And
That's
I
a lot of
echo what
work.
you're I echo what you're saying. I've had a chance to learn so much, meet so many amazing people, and discover new lanes and different aspects of this business as a
Yeah.
consequence. And what I hope I'm able to do is actually share those experiences with the audience so that there's a heightened awareness all around, right? I get a chance. I'm privileged to have the opportunity to speak with you and share this with everyone. So.
Yeah.
I, I really appreciate you joining me for this. It's really wonderful. Tell me, what's with the executive lens, you've obviously got some direction. With Savvy Squad, you've got some direction. What's the
Yeah.
goal? Where do you think you're going to be going here now?
Well, I mean, as I mentioned, this last 12 to 18 months has been really challenging. Like my family and I have well over $1 million invested, and it's unclear right now what will be coming back. So it's a very significant setback. I am cautiously optimistic some of it will be coming back, but at this point, everything is still in progress. The group that we were part of, they really encourage people to access the equity in their home to invest with, which is what we did. So, I mean, at the very, very, very least, we want to come back to a net zero with what we invested with in that respect. And, I think with Executive Lens, if I'm getting that kind of number of clients off the ground, then it will be very significant active income and it'll help with the recovery that much more quickly.
Yeah. So recovery's short-term goals. You're going to get there. I have confidence.
Yeah.
Tell me about the future. What's the end goal look like? What does success look like?
Yeah, I mean, it's hard to say that now because I felt like I reached that pinnacle, you know what I
Yeah.
mean? Like we call it lifestyle freedom, where you replace your income with what you have coming in passively. And in fact, again, I tripled what I had.
Yeah.
So I kind of felt like I was there. And what I really liked about that was the fact that I could do what I wanted with my family when I wanted. We didn't travel excessively, but a couple times a year we had good holidays and stuff like that. But to me, true freedom was really just having that time, right? Like I feel like I worked my butt off from as early as I could possibly work. Like I was applying to jobs when I was 13. No one would hire me because I was too young. But from like 15 on, like I worked around the clock, it felt like, right? And I did that in my 20s and 30s, and that's not sustainable when you're like have a young family and stuff like that. So
It's
really I
tricky.
just want to make sure I can have that balance and, leave that legacy to my daughter and just structure her in the right way that, she can reap these benefits down the road as well.
Yeah, no, I love this. I love it. I look forward to hearing what comes next, Serena. You have such an amazing story behind you, and you're barely getting started. I feel like there's so much more to you.
Thank
Somebody wants to get in touch with you. How should they go about doing that?
Yeah, so there's a few different options, but my Instagram profile, Serena Holmes Official, has most of the content there. I do have a YouTube channel which has all of my podcasts, so the full length episodes as well as all of the shorts. And again, everything's under Serena Holmes Official, but I do have the same platform with Instagram for Inspired to Invest podcast as well.
Love it. Love it. Serena, any last words for our guests?
No, I think that sums it up. But, I'm a big believer that we rise by lifting others. So I like to have conversations with people, anything I can do to help. And I feel like it's all reciprocal and it'll all come back to you at some point in time.
I love it. Thank you so much. It's been such a pleasure having you join me.
Great. Thanks
Ladies
for
and
having me.
gentlemen, if I may, please remember to like, subscribe, and share. This has been so much fun. I appreciate you, Serena. Thank you.
Thank you.